To understand the workflow of undeposited funds, we'll first take a look at the invoice. We'll go to the Cookies by Kathy. We'll take a look at when the invoice was made. This is the customer. We did some gardening for $75. And we'll take a look at the transaction journal. So we can look here that we did landscaping services, weekly landscaping services for $75. When we created the invoice, we debited accounts receivable for $75 and we credited sales for $75. This is the first step in the workflow. Now, to look at the second step in the workflow, we have to go to the payment. So let's go to invoices, all sales. Here we go. This is the payment. We'll take a look at the transaction journal. And we can see here that when we receive the payment, we credit this time accounts receivable. When we created the invoice, we debited accounts receivable. This time we credit accounts receivable and we debit undeposited funds. So basically the $75 went from accounts receivable to undeposited funds. To look at the next step in the workflow is we make the bank deposit. So let's go to the bank deposit and we'll go to reports. Balance sheet, undeposited funds. And this is the deposit for $75. We'll again look at the transaction journal. This time, we're debiting the checking account for $75, means we are increasing the checking account, and we credit undeposited funds. So we're taking it out of undeposited funds and we're putting it into the checking account. So that's basically the workflow for undeposited funds in simple terms. This happens with multiple transactions at a time. When we do this with high volume transactions, it's a little bit different, but this is just to understand the workflow of how undeposited funds works. You can also see here bank deposit, and these are payments you received that have not yet been deposited into the bank account. Now if we go to invoices, and let's say you receive payment for Burnett Design for $27.50 for this invoice here. Let's say they give you a check, we'll do number 1. And make sure that it goes into undeposited funds. We can also make the mistake, some people make the mistakes of putting this into the checking account, straight into the checking account. Make sure you follow the workflow and put this into undeposited funds. Save and close. And then when we deposit these payments, you'll see here, Burnett Design, check number 1, $274.50. So we can deposit these 3 payments. Another mistake that can be made is, let's say you receive the payments, and when you go to the bank deposit here, you enter the deposit here. So let's say Cool Cars, and you put the account, design income, and the way they paid you, let's say they gave you a check, and you write the check number 2 and 167.52. If you do this, you'll still have this in undeposited funds, 1675.52, and you have deposited this into your bank account, meaning that you'll have this income here and also this one. So you'll have more income that you actually have. So this would be your overstated income. So make sure that if you're depositing a payment into the bank account, you click this one here, and not through here. So let's say you're going to deposit all these three. You click all three, and you save and close. Oh, we'll have to click, let's say, check or cash. Check. 2. So this is the bank deposit that we just made. Let's say you receive an invoice. You receive payment for an invoice. Cookies by Kathy. You receive the payment. She gives you cash. Goes into undeposited funds. Save and close. We go to the balance sheet. For undeposited funds, we have 75 from Cookies by Kathy. Here with the payment. And now we go to bank deposit. When we deposit this payment, it goes into the checking account, the date, we save and close. And here we have the deposit of Cookies by Kathy.